Alright, guys, we're back. I tried looking up if I could play music on stream, and it was like, yes, it's a big deal. And I was like, oh, okay. So I guess I'm still not going to be playing music on stream, but we're going to keep backtesting. I do think this inversion was honestly the trade of the day, and I think there's a million confluences to why. So we're going to go over all of those in just a second. Hey, Kirk, welcome back, bro. So, like I was saying, I did just look up if it's a big deal to play music on stream. Apparently, it is. I don't know. I just don't want to risk it. I don't know. Maybe I could try it out on an alt account, but I just if it really is that big a deal, I just don't want to risk it. So, with that, guys, let's keep backtesting. And like I said earlier, I really do think this inversion was the trade of the day. Actually, before we start, I'm going to go use the bathroom, and I'll be right back. Alright, guys, we are back, and we are back for good. So, I don't see candles, I just see the algorithm. Yes, sir, bro, yes, sir. Bro, it's crazy, like, when you really get deep in the charts, it really does feel like that. Like, guys, and I was just about to get into this right as I got back, is for all the people who still aren't convinced about true opens, let me tell you why this inversion had such a high probability to work. It's because we're above midnight, which is the true day open. We're above 7:30, which is the true session open, and we're above 9:22, which is the 90-minute true open, right? And with all this in mind, guys, I might need to change this to 90-minute true open, but we'll do that later. Point is, this was in premium relative to time with all three reference points. And so you might not think it's a big deal, but it's very subtle, but it actually from what I can tell in my backtesting, it makes a difference. So anyway, this was a 90-minute SMT pretty clearly, right? 90-minute SMT. Do you guys think I should call 9:22 the 90-minute true open or 22-minute true open? I'm not sure. Because it's the true open of the 90-minute cycle, huh? This is of the session cycle, the daily cycle. So I technically should be calling it 90-minute, but whatever. I'm not too concerned. It doesn't really matter that much. But yeah, 90-minute SMT. Why is this 90-minute SMT? Look. 7:30 to 9. What's the high of this? What's the high of 7:30 to 9? It's this high. Then from 9 to 10:30, what's the high? That high, right? So 90-minute SMT. And honestly, guys, wish there was a better way to frame this, because that's pretty deep in discount for those other two, but that's okay. And I might change this later. I'll think about it. Yeah. True session open midnight. So we're above all of those. I'm actually curious where our true week open was. It's an interesting thought. Like, let's just see where it was, right? I think we were below it. Yeah, we were way below it. Okay. So 22-minute true open. Then what happens? We have, scroll over here. We had a 5-minute BPR. Check this out. 5-minute BPR in premium, right? Yeah, pretty extreme premium, right? 5-minute premium BPR. And then, yeah, we can mark it out from here to here. Actually, let's just get rid of that. We don't need that. And then, as well, remember the New Day opening gap? We talked about this. We came up. We need to pull up a couple more. Okay, so the high was the New Day opening gap. Interesting. Delivery from... So the New Day opening gap was right here. But we actually do deliver from the event horizon there, which is kind of cool. Okay. Let's go back. Let's go look at that. Let's start by looking at that daily volume imbalance, right? So on the daily chart, we had a really nice daily volume imbalance. And, I love anything on the daily chart that's super obvious. I love, because we can use it for reference throughout the week. That it's going to be powerful, right? So here's that daily volume balance, and check out the way the market uses this as a higher time frame key level, right? Daily volume balance here. Right, we push into that. Let's turn this to blue. And once again, guys, these are never going to be perfect streams. They might be a little wonky here and there, and that's just, because I'm not trying to make them perfect. I'm just kind of just backtesting like I would if I was on my own, right? And that way, anyone who wants to watch it, whether it be far in the future or right now, has the ability to watch it. And I just think that's valuable maybe to someone, and so that's worth making it a thing, right? So daily volume balance, we use this higher time frame key level. And then magneto effect, guys. Check this out. Magneto effect is when you have an SMT that wasn't a time-based SMT. So, for instance, we had it was, midnight. It was midnight. Or no. Yeah, midnight and this low. It was an SMT, but it was at midnight, so I would not consider this from Asia. So, we just have a regular SMT. This is going to be an amazing draw on liquidity now that we had a time-based SMT. So, magneto effect. So SMT. Now, I wonder if there was any other SMTs here. I don't know. I don't know if I see any other SMTs. Anyway, as far as drawn liquidities go, we had, obviously this was just a giant accumulation range, right? So high time frame AMD, low time frame AMD. Actually, maybe we should see if there was like a gap. That's probably important. Yeah, so we had this 4-hour gap here as well. So see, now this kind of looks really nice. Actually, let's see if it's a 1 hour. Yeah, 1 hour gap here. Yep. Making sense now. 1 hour gap. Actually, let's mark it out as that 4-hour gap. So 4-hour gap. We get SMT at the high. Yeah, 4-hour BPR. Oh, look at this volume imbalance. Interesting. And we had a 15-minute rejection block. So that was a Phoenix model there. Anyway, the point is, the trade we're trying to get at is that we had a 1-minute inversion. You could definitely make the case that this is not an inversion because we actually do not close. So that is something to know. Actually, it's not even really valid. I didn't actually realize that. But maybe you could still take it if you had conviction. Honestly, guys, the signature looks really nice. You might be able to still take it. Or maybe take it on the 32nd. Yeah, I don't know. I think maybe you could just override the rule, because this is just really nice. So once again, this is why we backtest. We learn stuff. So because of the signature, and then even though we don't perfectly inverse it, I still like it. But, maybe everyone doesn't agree with that, and that's fine. And you could target midnight, right? Actually, realistically, let's just say we target the other side of the range, right? So accumulation. And yeah, it doesn't close, but like I said, I still think it's got good signature, so we could, it still might be worth taking, honestly. We're above all of our true opens. So, accumulation. Into the BPR. Yeah, I like it. I know it doesn't inverse, but still, I still think it's decent. Let's just screenshot it. Makes sense, right? I know it's not valid, but because of the signature and the fact that it's obviously AMD, I actually still like it. So that's why I backtest. What matters is AMD. At the end of the day, what matters is AMD. Everything else, it means nothing. It means nothing. AMD, that's how these markets move. Everything else doesn't matter. So I don't care if the inversion wasn't perfect according to Dodge's model. I don't trade Dodge's model. I trade AMD. Right? That's the end of the day. That's how I see these markets. It's just every strategy comes down to AMD. So once you understand that, you can kind of just do whatever fits into the AMD cycle. So you just got to get your entry. So this is a 1003 inversion for value gap on the 1 minute. We're above our true open. Sorry guys if this is more boring than normal, but I'm just not in the mood to try right now. I'm not gonna lie. I'm not in the mood to try to make the stream more interesting. I'm just kind of just backtesting like I would be if I was by myself. And I'm maybe not feeling like talking a lot, and that's just because, yeah, I'm not feeling very energetic. I'm just here. And so if I don't talk a lot, that's just because I'm not really trying that hard, like I said. But anyway, did we save this yet? Okay, Friday. 10:03. Oh, it was also during the macro. Let's add that as a confluence, right? Once again, I see the macro as from the entry to the end of the macro or the draw on liquidity. Actually, let's just mark it out like this. So that's another reason for why you can maybe override the fact that it wasn't a perfect model valid inversion, right? Because we didn't get the inversion to close through, but once again, based off of AMD, I still like it. What matters is AMD. We could actually go, we could actually scale out, right? It's never all or nothing, so we could do final TP. Once again, this is kind of like a consolidation over here, so we could use this as a confluence for final TP. Because we're stopping people out from that consolidation all the way over there. And obviously you'd scale out. This is kind of chaotic. We could get rid of this 5-minute BPR. Okay, that makes it look a little nicer. Okay. And guys, I might keep the stream going or I might restart the stream and go to the dunes tonight and stream more at the dunes. Just like I said, I have nothing to do, I have no friends, so might as well. But yeah, because of AMD, I still like this inversion. So what was this, 10:02? Inversion for value gap on the 1 minute. Sweet. Let's go ahead and save that. This was Friday, September. Oh, I wrote the wrong date. Let's fix that. Is today September 26th? Wow, I've had the wrong date all week long. How did I have the wrong date the whole entire week? That's kind of sad. Alright. $23. Wait. 9. See, now it's fixed. 922, 923, 924, 925, 926. Okay, we're good. But yeah, we did just save that. Yeah, 10:02 inverse for value gap 1 minute. Okay, once again, we don't have to take this as an inversion for value gap. We can take this with understanding these markets as AMD, right? All trades revolve around the same concept, AMD cycles, right? With that in mind, guys, we don't need to take an inversion for value gap. Let's say that wasn't what we wanted, right? Or that wasn't, since we didn't see that as valid, we needed to see something else. In that case, we can still get an entry with a flow state, right? We had a 5-minute BPR, still, once again, a very obvious AMD, but now we have a 30-second change in state of delivery instead of an inversion for value gap. And this is still valid, right? Macro, accumulation, manipulation, above the true open. I would take this on the close, right? Very obviously, we're getting AMD. This one probably have stop. It's kind of hard. Obviously, stop should go here, but you could maybe put it here, probably be fine. And yeah, same thing, right? We could target that low. We could even target lower. No, it's probably fine. I'd probably just do it like that. You could enter like that. The only thing is, no, you can't enter like that. That's not a valid change in state. So I don't love this because it closes a little too low. Yeah. We could take a 15-second change in state off of it. That's probably what we'd have to do here. Oh yeah, look at this one. Well, there's nothing wrong with inversion for value gaps. They're amazing, right? But these markets go much deeper than pretending that inversion for value gaps are the only way to trade AMD, right? And I'm sorry, no hate to Dodgy, but he has a very one-dimensional mindset when it comes to these markets, that the only way to trade them is inversion for value gaps. And to think that everything else doesn't work, it's like, no. It's not, the market is not a 1 or 2-dimensional market. It's just AMD, right? We just gotta get on side with AMD. That's it. So one thing I will say is I don't see an obvious change in state that is clear that we could enter off of, actually. But let's just say we took this one. We could probably get a nice 2-to-1 off of this if we had entered this perfectly, which once again, I'm not suggesting that I would have. But let's go ahead and save this. It's worth marking out at least. Right, we're above all of our true opens. Let's drag these over. Yeah, 5-minute BPR, 30-second change in state, close. Once again, Just getting on site with AMD. It's a little, low of a close for me, so there's a chance I wouldn't have taken it, but we'll still put it in our journal. We'll still put it in. But yeah, the key, guys, AMD. That is the key to these markets. So let's go ahead and screenshot this. This is a flow state close. And 10:03. Flow state close. 5 minute aligning with the 30-second. Let's save that. Bang. Does this look good, guys? Looks good to me. Alright, guys. Let's see. What else? What other opportunities were there? This was obviously the manipulation. We could have gotten in with this sequential SMT, right? This being a time-based SMT. Phoenix model here was very nice. We're above all of our true opens. So let's actually look at that Phoenix model real quick, and I'll show you what I mean, right? Now, unfortunately, I did not see this in the moment, and I wish I did, and honestly, I didn't even see it while backtesting for at least the first 10, 20, 25 minutes, right? But now I can, now that I'm kind of like getting my brain warmed up, I can kind of see, okay, yeah, we had a 15-minute rejection block with SMT. Clearly, this was Phoenix model, right? Let's get rid of everything else besides the SMT and the rejection block. This is all we need. This is all we need. And does this rejection block take out liquidity? Yeah, it takes out an old high here, so decent rejection block here. So 15-minute rejection block. Here is a time-based SMT. So one way to do this is you could enter at the rejection block. Once again, that's the riskier version. I'm not saying it's riskier. It's definitely more rewarding. It's definitely more rewarding, but it might fail more. I'm just saying it might fail more. But anyway, check this out, guys. Why could you have conviction in this idea that maybe this Phoenix model was likely to work? Why could you have conviction in it? Because clearly we had an accumulation range below. So what is Phoenix model really doing? You're buying the top of the market maker model, right? That's what you're doing. So you could pretty easily assume, because we're above midnight, based on the accumulation range below, being above all our true opens, and the time-based SMT, that this 15-minute Phoenix model was high probability, right? Accumulation. We get a liquidity sweep of these bodies here into the rejection block. Actually, no. Here's the liquidity sweep, right? This is way more obvious. Here's the liquidity sweep. And then basically we're entering at the rejection block. Obviously this is scary, but there's a lot of confluences to this idea, right? And then we could target the other side of this range. We can also project out the rejection block itself. This is kind of what I like to do with Phoenix model. It's something I knew I learned about not necessarily learned, but I discovered. And this is going to give you good projections. Once again, the 7th standard deviation proving itself better than the 8th. it's happened so many times now that it's kind of hard to argue that it's happening, right? The 7th, for some reason, provides more of an accurate take profit than the 8th. I'll never understand that. But, yeah. And it was also right below midnight, too. And as well, you could take profit at the 4th, but this is just kind of proof of concept, right? So sweep with this range, accumulation. Here, let's actually mark out the sweep like this. Actually, no. Accumulation, manipulation into the rejection block, and that's where we enter. So this is Phoenix. Once again, this is going into the macro, which is another confluence on its own. So yeah, I'm not going to put out the macro because this is enough charting for this this trade. But anytime I have a rejection block sweep, I think I'm going to do it like thicker. I'm going to make it thicker. There we go. So Phoenix model. We should maybe make a different name for Phoenix model that comes with a time-based SMT. Like, I don't know, like Phoenix, maybe Phoenix Plus, but that's kind of for when you take a change of state of delivery off of something. I don't know. We'll think about it. But anytime you have Phoenix model, when you have a time-based SMT, it's always going to be better. So there's 10 o'clock. Phoenix model. 15-minute rejection block. There we go. Let's go ahead and save that. Yeah. That looks good. Let's actually just call it Phoenix. We don't need the model part. As always, you could have taken this as a 1 minute change of state off of it, but it's a little scary. You can see we only hit the second standard deviation of that. I'm not super in love with that, so. Another thing to note, guys, that I'm just now realizing is sniper model, right? We ended up having 1 minute change of state off of this. And we end up perfectly tapping the sniper model. Do we have a 15-minute key level? We do. Whoa. 15-minute key level right here. Wait, what's this? Volume imbalance. Right, so the volume imbalance caught the high. This is interesting, right? Volume imbalance catches the high. And then the 15-minute gap was our PD array. How could we know this 15-minute gap was higher probability? Maybe it was a Goldbach gap. Once again, guys, if you're not listening to music, what are you doing, bro? We gotta turn this up a dealing range here. So, guys, Goldbach for value gaps. Don't sleep on them. They're higher probability. It's in the liquidity void section. But once again, guys, I'm noticing a lot of the time when you have fair value gap in that liquidity void section, it still kind of acts like a Goldbach fair value gap. So we might just consider this a go block for value gap anyway. Because actually because look, we tap the for value gap partition. So I think that's good enough. And then we go to the dealing range low, right? Okay, let's check this out. 15-minute gold block for value gap. And then let's actually make and then we had a 1 minute change of state down here. So this is our higher time frame PD array. 1 minute change in state. First, second. Yeah, this volume imbalance was crazy. Once again, guys, if you don't know what sniper model is, it's basically you take the change in state of delivery and where you would measure out standard deviations from. OTE of that is going to be a sniper entry. Once, like, basically you're entering at a flow state on a flow state model in a retracement. Yeah, this was a very high probability inducement, right? Because we're inducing with SMT into the sniper entry, into OTE. Okay, this volume imbalance is crazy, guys. I'm not even gonna mark this out as a trade. I'm just gonna kind of show, look at how everything perfectly aligned. It's crazy the amount of stuff you can learn. So, guys, I think volume imbalances in the gold block partition are going to be higher probability, as you guys saw just there, right? We had that volume imbalance within that gold block partition, and it was higher probability. Inducement into sniper model entry. Changing the song. Was there not 22-minute SMT? Let's see. So 9:45. We need SMT with here and here. I don't think there was, and honestly, there probably didn't need to be. Okay, let's look at something else now, guys. Let's see here. We had this old 1 hour gap. Scan OTE hit. So once again, pay attention to that, right? OTE of the manipulation leg of flow state. I don't know what we should look at now. There's probably no one watching. I bet I'm being so boring right now, so I bet you there's no one watching. There's one watching. Let's go. It's probably Kirk. Yeah, guys. Sorry if this stream is more boring. Let me know if I should maybe end it, but I'm not gonna end it. There's no point. Might as well be live, right? We could look at London. I'm actually curious to look at London. Let's look at London. Yeah, hang on. Kirk, you're still watching. That's funny. I honestly didn't think anyone was watching. But yeah, guys, I'm just chilling, listening to music. I want to look at London session, so we're gonna do that. So for London session, guys, I really like to take a look at 130. I think it's very important. And also, I might eventually start trading London session. Just because for some reason, I always feel like price action is so obvious in London session. It just looks easier than New York. So, I don't know. Like one day when I'm at my own place and I can stay up all night, I would definitely consider trading London, so I want to learn how to trade it. 15-minute for value gap. I think we had Asia low over there. We actually swept out Asia low here. Alright. And does London have a first presented for value gap? This is a good London masterclass right here, right? We're going to learn a lot about London. Does London have a first presented for value gap? And if so, what time? And which macros are going to work best? A lot of questions I have. Okay, so show AM gaps, show PM gaps. So let's just go to, since London looks like it starts at 2, right? Let's ask GPT of ICT. Not this one. ICT GPT. And guys, if you've never used this, I highly recommend it. I don't use it a ton, but it can be helpful in situations like this. Okay, so we'll probably just do the first app that forms after. Yeah, that one wasn't useful. We'll keep testing that. It's a ongoing experiment. So, next thing, right, is I want to show we swept out Asia low. Oh my gosh. Once again, guys, this is the same thing that happened last week. This is so fascinating. Right? Right as Asia ends, we get this algorithmic looking candle that takes Asia low. That's a high frequency trading algorithm, guys. Right? This high frequency trading algorithm that used this, that swept Asia's low here, this is crazy actually, right, is going to use this rejection block to go long. Nah, this is crazy, right? So they purposely generate this wick sweeping Asia below midnight to go long at this 1 minute rejection block, because what is this? Phoenix model, right? Where do we tap? So Phoenix model, don't think of it as a bird. Don't think of it as a phoenix. It's not either. This isn't some made up thing. No, Phoenix model is real high frequency trading algorithms taking liquidity and then getting orders filled once we it's them taking liquidity and manipulating the market, getting their orders filled, and then sending price the opposite direction. Makes sense? Don't think of Phoenix model as a bird, bro. Think of it as what it is, a high frequency trading algorithm. And no one else is going to understand that. They're just going to think, oh, it's just a bird, bro. No. This is high frequency trading algorithms working. And clearly, they did this on purpose to go run low resistance highs, right? I mean, guys, if you can't see it, I don't know, man. You got some looking to do, because it's happening. It's happening, and it's happening constantly. And honestly, things like this are reasons for me to think that trading London might actually be even easier than trading New York, because this is going to happen, and we're just going to be like, oh, yeah, that's a high-frequency trading algorithm, obviously. Like, we're going to be able to enter on that. So, once again, now we want to see if we have SMT, as always. Oh, we might have had SMT with... Oh, wait. This is interesting. 18 o'clock is when Asia starts. Yeah, so we have SMT. What matters is we have SMT with the rejection block. Right here. That's what matters, right? We end up having SMT with it. Below midnight, which is also very important. Right? You guys see this? You guys see it? Once you see it, you can't unsee it. Once you see it, you can't unsee it. 1 minute rejection block, 15-minute fair value gap. Not even just any rejection block. This rejection block was obviously algorithmically generated right after midnight for them to send the market higher again. If you don't think this is cool, guys, I don't know. I don't know, man. Something's up because this is the coolest thing, right? And all of these are low resistance liquidity. So, what is this? Accumulation, manipulation into the rejection block, distribution. AMD. Folks, that's all these markets are. AMD. It's beautiful, isn't it? It's beautiful. Accumulation, manipulation into the rejection block. 1 minute rejection block. And then distribution to go around that LRLR. Take profit at the high. So what's the RR on that, guys? Let's figure this out. Now, obviously, you could have kept runners, but you could have kept runners for these equal highs. You don't need to, though. So there we go. Like I said, I'm going to keep this stream going, even though no one's watching, even though, you know, it's just me just chilling right now. Because if it can help one person, it's worth it. Oh, you know it'd be crazy if this was a gold block rejection block. And there's honestly a pretty decent chance that it is. So gold block is price. Quarterly theory is time, guys. Yep. Rejection block forms at the low of the dealing range, sweeping liquidity into the low of the dealing range. Look like I'm making this up? Does it look like I'm making this up, folks? Does it look like I'm making this up? It's because it's the truth, bro. I can't make this up. This is market making. This is real life market making. High frequency trading algorithm takes the low of a high probability liquidity pool and then uses that same wick to recapitalize a position to target the stop losses, right? They stop them out here, they re-enter here. They did this on purpose. You see it? They did it perfectly into the low of the dealing range and then sent the market to the high of the dealing range. That is insane, bro. Just insane, guys. Like, you have to... Man. That... Indescribably insane, guys. Yeah, I'm gonna walk around for a second. That's insane, bro. You don't have to be an institution to beat the market. You just have to know what they're doing. That's all you have to do. You just have to trade with them. So we got the relatively equal highs here at the high of the dealing range. Let's just say that we did take profit there. This is probably the coolest thing I've seen in a long time, guys. This is perfect, right? Here's the, what is this, 81 low? Goldbach is price, quarterly theory's time, guys. You see it now? You see it? Equal highs. So, once again, sweep liquidity into the low of the dealing range. This is called perfection. This trade right here, this trade's called perfection. It doesn't get more perfect than this, guys. This is crazy. This is crazy, bro. So, Phoenix model from the rejection block to those relatively equal highs. Let's measure out standard deviations of the rejection block. Holy. The heck? What the heck, bro? Nah, because they just knew this whole time that when they made the rejection block, though, they were going to exactly send it 8 standard deviations up. The crap? This, at some point, this kind of just freaks you out a little bit, don't you think? Just a little bit freaks you out, don't you think? This is, it's freaky, dude. So here's the regular Phoenix model. Once again, sweeping liquidity into that liquidity sweep partition. Dude, this is like literally insane, bro. Like, the deeper you go, the crazier it gets. Once you unsee it, you can't unsee it, bro. By the way, guys, I am listening to music. I highly recommend that you guys listen to music as well, because I can't play music on the stream. I wish, right? I would totally. Oh my gosh, bro. Like, it's insane. Like, so what I've been looking at, by the way, BLJ, for you just now joining, is literally right at midnight. You can't make this up. We generate a rejection block within the low of the dealing range, sweeping out liquidity, right? This orange area, this is where you would expect a liquidity sweep to happen, right? So you may or may not know that Phoenix model video I made the video about, right, where a rejection block gets made that sweeps liquidity. We'll get SMT with it, and the top of it and the midpoint are going to be very sensitive. All these are low resistance highs, and then where do we go? We deal to the opposing end of the dealing range, right at these equal highs, right at 8 standard deviations up from the rejection block. The heck? You have to make, it's pretty insane, bro. It's pretty insane. They're literally running algorithms, bro. They have a rejection block form at the low of the dealing range. They reposition themselves now that they've taken liquidity, reposition themselves, and then send it to the opposing liquidity pool. That's an algorithm, bro. If you can't see it, I'm not here to convince you, cause I'm gonna be taking these trades, bro. I'm not here to convince anyone. I'm here to help if you want to be helped, or not, right? That's it. That's the only reason I make any of these videos, is to help everyone. Past that, I'm gonna be banking it in a couple years or less, hopefully, right? Probably less than that, right? But the goal is I'm gonna be banking it. whatever the case, I'm gonna be banking it. And I want to bring you guys all along with me. Yeah, well, I wouldn't say get back into it. Just kind of keep an eye on it in the corner. Like, I wouldn't recommend putting too much focus into it, because it can get kind of confusing and it can overcomplicate things. But one thing I will say is it's true, right? The markets do utilize it. It's just common sense if you really think about it. Like, if the market maker model is going to form somewhere, you want to have a little template for where it should form. It's very simple, actually, when you really think about it. This is obviously a market maker buy model. Very, very obviously, right? Push into a higher time frame key level, right? 1 minute change in state, and delivery to the opposing end. So, this tells you where should the low of the model form. This tells you where the high of the model should form. All we're doing is we're saying let's find AMD within that. Not suggesting, guys, you should overcomplicate anything. I never suggest you should overcomplicate anything, right? Because it's going to make it harder for you. But what I'm saying is, the reality is, the truth that gold block actually does work. So it's not overcomplicating. It's just me telling the truth while also letting you know, like, don't overcomplicate it if you don't need to. But gold block is the truth, bro. That's what I'm trying to say, right? Hopefully that makes sense. Let's go ahead and screenshot this, guys. What PO3? So you need to turn this setting on. It's the 1/2 setting, and it's very important because otherwise gold block is just never gonna make sense, right? You have to shift it half at a time. It's just something I discovered through just messing around, right? So turn on that half setting, and then do -3, and then power of 381. So, anyway, let's go ahead and screenshot this. Look at that, man. Let's go ahead and screenshot that. So this is Phoenix model, right? At 55 a.m. So 12:55 a.m. last night. 00-55 Phoenix. Here, I'll show you guys what I'm typing so you guys can know how to journal this. Phoenix, and then, or I just put Phoenix, and then I put the time frame, right? Time frame was 1 minute rejection block. And then I just click save. And then I'm also going to show you how you could have entered on the midpoint of the rejection block. I call this the Phoenix Mini because you're having a mini stop loss and it gives you double the RR when you enter on the consequent encroachment of the rejection block. So there we go. But yeah, guys, look at the fact that we generate this wick right as soon as midnight closes. It's very obvious. It's very obvious that they took Asia's low to take stop losses and they recapitalized positions within this wick. It's that simple, guys. It's liquidity. It's liquidity. If that doesn't make sense to you, let me explain it like you're 5. Oh, yay! I'm excited for the market to go up. Oh, Dan, you know what? I was wrong. I'm going to sell here. Actually, I have a stop loss here. Boom, stopped out. And then right here, once again, you sell more. And you selling more is them buying more. If you're going to buy something, you need someone to sell it to you. And then you buy back at the high. They sell at the highs, you buy back at the highs. It's liquidity. Okay, 00, what is this, 55? 0059. Phoenix Mini on the 1 minute. Do you trade the London session? No, but I'm looking at a London session because down the road, when I'm on my own and have my own place, I think a lot of time I'm going to be vibing and just probably trading London session overnight just for fun. So I like to look at it to learn. Because price action is price action, and I like to learn from it no matter what time it is. Plus, London honestly kind of, I don't know if I'm going to be, I know no one really says this, but I'm going to say it, bro. I kind of feel like London looks a little easier than New York, bro. It's pretty straightforward. There's usually one main idea for the entire session, and then, you know, you just execute, and you can get the whole move. I don't know. Simplicity. I like the simplicity of London session. Sometimes it can be, you know, it can be nice that London session is so simple, in my opinion, from what I've seen from my own backtesting. Not saying everyone needs to do their own backtesting and figure out what makes sense for them. 0059 Phoenix Mini. Once again, mini meaning I entered at the midpoint of the rejection block. And then 1 minute. Alright, guys. I'm going to take another break. Yeah, it's like so straightforward. It's crazy. But yeah, when I have my own place and I'm able to stay up all night and I'm hopefully making full-time money from trading and YouTube, hopefully, I'd love to trade London session. I mean, why not? There'd be no point in not. It'd be extra money. So, as long as I'm profitable, which I, better be. So, I'm going to take a break, guys. Alright, guys. I'm back. Like I said, I'm gonna be here a long time, guys. I don't really have anywhere to be, anything to do, so I'm gonna be chilling, hanging out, and yeah. See you later, bro. Happy back testing after the break. Yes, sir. Okay. But yeah, guys, I have nowhere to go, nowhere to be. Just me and the charts. I might even go do part 3 or part 4 at the sand dunes later tonight. Literally have nothing to do. I'm just hanging out by myself, having fun with you guys. No one's watching, but still, right? Just hanging out. So, with that, guys, let's keep going. So, crazy stuff. Where did we leave off? We had that 1 minute rejection block. Obviously, algorithmically generated. This right here. This is obviously a high frequency trading algorithm, right? Why? Because right the second after midnight closed, they sell into the low of the dealing range, then buy back to purposely generate a rejection block to then re-enter later and send price higher. It's crazy, man. I mean, that's kind of how I see it. Could, might not be exactly like that, but clearly it's something like that, I mean, if they're able to execute orders at that size and they know they're able to do it in milliseconds, it's worth doing. Okay. So, once again, this was a higher probability rejection block because it was aligned with our gold block rejection block partition. Let's go ahead and screenshot that again. What am I listening to? Anyway, I'm gonna keep going. Alright, I'm actually going to make a note of this. The rejection block swept liquidity into the low of the dealing range, making it a gold block rejection block. And I know no one's probably watching. Actually, we'll see. If there's more than one person watching, I'll show you guys something cool. Dang, this song's actually kind of good. Let's save this real quick. Rejection block swept liquidity into the low of the dealing range, making it a GB rejection block. Okay. Let's make sure we save that right. Yeah, if there's anyone watching, I'll show you. If not, then I'm gonna just keep going. Actually, I probably won't show it if no one says anything, even if someone's watching. There's one watching. But anyway, I'm going to just move on. Okay. So we had midnight there. 130 forms right here. So here's our true session open. Holy. Yo. What the heck? Nah, bro. That's crazy. Look what happens, guys. Right after 130 forms, we manipulate below both, and then we expand. This right here, orders got filled. Let's pull up that Globok range again. Note where this occurred. The fair value gap partition, bro. Oh my gosh. That's insane. And you might be wondering, where's the fair value gap? I actually think the fair value gap is right here. It's a reclaimed fair value gap. The original fair value gap formed right here. I guess there's one right here too. No, yeah, there's one right here. Oh my gosh, dude. The heck? So not only was there a rejection block entry, but there was a 2022 model entry, right? We had a 2022 model on the 5-minute. Like, when you look at these markets like this, in this lens, it almost feels too easy. Like, guys, we gotta be able to catch these at some point. It's coming. It's coming. And once again, here's that fair value gap partition. Add this to my like songs. So 2022 GB fair value gap. And then let's get rid of the range. Do we rebalance equilibrium? Not of that, but of this. And of this. So, because once again, liquidity sweep, a break of structure occurs here. So, interesting. Equilibrium of this. That's the equilibrium that was relevant. Anyway, that's interesting. That actually might have been the exact low. Whoa. That's insane. That was the exact low. No way. Imagine thinking this is random, bro. Imagine. This is crazy. Guys, this is crazy. This is crazy. This is crazy. Let's keep going. So, from the rejection block to the 5-minute gap, manipulation of midnight, manipulation of 130, yeah, bro, that's crazy. Imagine thinking ICT is not lying about Goldbach, bro. Imagine being that clueless, bro. Can't be me, bro. Can't be me. So like something like that. So equilibrium getting sniped right here. No drawdown at all. Not 1 inch, not 1 millimeter of drawdown. Not even one. About from here to here. Same thing. That's crazy. Anyway, I'd put the stop loss silver down here. So this is a 2022 model, but sniper equilibrium version. $137. I wonder if Day knows about Goldbach. You think he does? Because honestly, he might not. Because I feel like if he did, he would talk about it. And he doesn't. 137. 2022 model, equilibrium snipe on the 1 minute. And this is at 137. Yeah, that looks good, right? What do you guys think? Oh, there's 2 watching. Let's go. But yeah, once again, you could have taken this as a regular 2022 model where you enter at that fair value gap. Stop like that. Actually, no, you probably enter below midnight. There you go. So this is a 2022 model. Same thing. So I marked that last one out wrong. 135 2022 model on the 5 minute. Okay, we gotta save the old one again. I saved it wrong. Yeah, guys, I might go get water and then reset. I'm gonna do that. I don't know, guys. I might do part 3 later, but I might end it right here for now, temporarily. Yeah, I'm gonna probably do continue it later, but I'm gonna do I don't know. We'll see. I don't know how long of a break.